Welcome to TradeTheMBI.com. This is John. This report is for the 5th of May. Happy Cinco de Mayo for those in areas that know what that means. From a market standpoint, of course, we saw the weakness building here as we saw the MBI readings, it developing. It held on pretty well for the first day, and then there was these comments from Yellen about the fact that interest rates will have to rise, and this is because everybody is seeing inflationary issues based on supply chain disruptions. And when those comments came through, we plummeted below what we were talking about. DFAST right there, the 4162, which is our ABM level, and as soon as we broke below that, the selling accelerated quite quickly. But then there was an immediate reversal of those comments, and that started to build back up. And once we got back to the ABM, again, still becomes the same situation above the 62, more bullish than bearish. A little rise here in the red above the blue, which is reasonably bullish, but we're still within a full DOC steel reset. So there's plenty of capability, of course. This corresponded perfectly to new fund buyers with all that money, so they were flush with cash to buy the dip, and that's exactly what they did. From an NQ standpoint, a bit more exaggerated weakness, and it's been a little more sustained. So NASDAQ's got bigger issues, and you can see it clearly from the MBI readings as well as the DOC spread that took place. But it started, right back over here. It was right about there at the ABM level for the NASDAQ, and once it broke below, it's been pretty significant. But of course, we talked about it. This was the positive extreme right here at what is currently the 61%, and came extraordinarily close to it before popping. We're still below the extreme here, so the potential for revisiting those lows still exists and still a prominent feature. From a gold standpoint, still holding on to the pressure. It's really going to be a point at which it becomes clear that there are breakouts, because while you do see some inflationary areas, there really isn't a consensus as to whether it's going to be temporary or if it's a sustained thing. And like we've talked about before, I mean, this becomes a question of labor issues, and whether or not you see wages rise, that will really be the predominant pressure point that will determine it. Euro just built back in its positive extremes, but it's been in a little bit of a weakness here, but just coming back to the 50% level. So nothing dramatic going on there. From an intraday standpoint, it was quite interesting. I had shown a picture on our Skype chat of the adjustments I had made using the green dot short setups. It worked for a little bit, and then I was doing some other changes, and then it stopped functioning. So trying to figure out where that went awry, but we had some decent pops that started off, and then once the sell signals came in, it pretty much stayed that way continuously down to the drop. And then at the bottom we started to get little ones, and like we were talking about, no DOC steel reset, so I'm like, hey, this is going to be short pops back and forth until we get that. And then finally it occurred right over here once we got past the 23% level on the Morganachis, and then once the low started to decline, you're kind of looking for it to push back towards the highs, but we were still in some fairly decent accumulation within this sideways, and we faded a little bit further, and then as we move across, we started getting some significantly decent buys coming off of the MBI setups, but again, still you had these extended runs where there was no steel reset and no dips below the orange until midway through. So as soon as they flipped, and you can see here I've got the little dotted red lines with the dark MBI, and I'll probably send that out to you guys just so you'll have them so you can see where we would be looking in, and it's significantly earlier than where the traditional sell signals come in, so it's effective that way, and I think that would be good to see, because it gets you in just enough at the tops as opposed to the point where We get some of these violet signals just at the ends, and then they turn around, and it just gives you a higher entry to either collect some gains or not be affected when you get that real quick pop-up when we get down to the red below zero. And I always talk about this, when you get down to that, this is under 1 right there, and then it creates that secondary pivot, which immediately led to the pop-up. But once we got that buy configuration, it just stayed there and kept going, and that's what we're seeing is a continuation right now. Of course, developed plenty of positive extremes in between here. Some have already filled back in place, but there are a few older ones that still have resonance, but pretty clean that they've been taking them out as they go. So it just indicates that we can continue to follow the trend. Of course, a lot of DOC with cyan under red, so always in that buy configuration there. And pretty clean action from that standpoint, and following pretty decently with the color coding, so no objections to that whatsoever. As always, though, I'm going to continue to update you and try and resolve that issue with the green so that we can all have exactly the same view, because if I turn it to my other one, this is the C version. Fortunately, I didn't change the A version. I do it on an alternative one so that it doesn't impact our ability to go forward. At least the magenta ones are working. It's just now getting the green to function properly, in which case even some of these, and it's usually off of this chartreuse or MBI buy signal that isn't flipping over. So the little things that always have to get taken care of, but that's all right. We're moving along nicely. It's looking really good, and we're catching the broad majority of these moves, so that's the most critical aspect of it. As always, though, I will continue to update you on the Skype chat. Trade well. We'll talk to you later.